and welcome. You're watching the Business Today show. I'm Chaiti Narula, and let's start off with the top headlines at this hour. Microsoft becomes the latest IT company to lay off workers. Reports say nearly 1,000 employees fired across several divisions worldwide. Laid off workers turned to social media to express their angst. Global growth slowdown triggers concerns for the Indian economy. Weakening industrial output hampers growth. Inflation concerns keep the central bank on its toes. We decode the state of Indian economy with Nomura India's Oradeep Nandi. Catch more on the show. Bulls reclaim lost ground as strong global cues lift Dalal Street. Sensex up over 500 points. Nifty ends above the 17,400 mark. Banks lead the rally. Big blow for the government's efforts to balance its accounts. This year's disinvestment target likely to be missed again, with BPCL and IDBI Bank off the auction block. Analysts say garnering 650 billion rupees is nearly impossible. Big relief for the farmers. Minimum support price for rabi crops, including wheat, mustard and masoor, hiked by up to 5 rupees a kilo for the next year's procurement. Government says move will not add to the already high inflation. Let's begin with all the action coming in from the Dalal Street. The bulls continue to reclaim lost ground as strong global cues lift Dalal Street for the third consecutive day. Sensex gained over 500 points while the Nifty shut sharp above the 17,400 levels on your screens right there. Amongst the sectors, banks were the ones that led the charge. State Bank of India, or the SBI, was the top gainer in the Nifty 50 pack. Adani Ports, Eicher Motors, ITC, SBI Life were the other blue chip gainers. On the downside, you had NTPC, HDFC, Sun Pharma, Britannia and Tech Mahindra. They were the losers in the trading session today. With the world economy facing a downturn and inflation on the rise, growth hangs in balance. In India, the industrial growth has taken a major hit and inflation continues to spike even after the RBI hiking interest rates. Business Today TV's managing editor Siddharth Zarabi spoke to Dr. Oradeep Nandi, Indian economist, vice president at Nomura India, about the state of the Indian economy. Listen in.
Latest observations in a report where you say that inflation has peaked in India while growth has tanked or is tanking. I want to ask you, has inflation peaked or is it an artificial peak, Oradeep, because petrol and diesel price hikes that should have naturally happened over the last few months have not happened because there is an artificial freeze on daily price movements?
I think it's important to understand that inflationary pressures are still pretty much live, right? So even though arithmetically it may have peaked, so essentially inflation in September hit 7.4%. Part of this is because of what in economics we call lower base. So the inflation last year for the same month was lower, and hence this inflation is a bit higher. But I guess what is worrying is that if you unpack the inflation reading, you'll find that on the food inflation side, pressures are broad-based. So a number of food items have shown upward revisions. I guess what is sort of even more worrying is the fact that within core inflation, so core is when you take out food and fuel and even petrol and diesel, if you like, from the basket. Core inflation is quite sticky for India. It's been remaining elevated. Core goods inflation continues to inch up. This is despite global commodity prices falling. So essentially what firms are doing is they're saying, all right, this will help our margins, but the price pressures are still being incident on consumers. Core services inflation is also pretty sticky. So a combination of all these factors sort of make us feel that underlying inflation is sort of more at around 6% or so level, if not a bit higher. Now you're right about petrol diesel prices being constant for a long period of time. So this is despite crude oil prices somewhat falling. So essentially when crude oil prices rose, quite a lot, then petrol diesel prices didn't rise as much. And so there were under recoveries for oil marketing companies that they're trying to recoup at this point. But looking forward, inflation, we are concerned about high inflation in India. One, we are already seeing very high cereal prices, wheat prices quite elevated, stocks are low there. We could have further food inflation prices, food inflation feeding in the rest of the year. Also, we are seeing this very familiar pattern of firms passing on higher costs, both on the goods side and the services side, and that kind of sticky inflation is still pretty much there. And we are always cautious about what, again, in economics we call second round effects. So when you've had high inflation for a very long time, you're really worried that inflation expectations go up. So your audience looks at here's your report and says, oh my God, inflation is rising, hence my expectations rise. And when that happens, that creates a kind of loop which brings higher inflation second round, which leads to higher wages. And that's another thing that we need to monitor. I'm not saying they're there yet, but these are pressures that we need to monitor. So overall, we are quite concerned on the inflation front. We are expecting 6.8% in this fiscal year.
Okay. Give our viewers a sense of what's happening as far as industrial output is concerned. The headline obviously being that it weakened further in August.
Yeah, so industrial production has been quite surprising. It's been quite weak, and I think this is one of the reasons why we are starting to get nervous on growth, because industrial production essentially was minus 0.8% on a year-on-year basis. So that's compared to what it was last year in August. Versus 2.2% in July. Now, there is a concept known as sequential momentum in economics, but without getting much into the technicalities, essentially the industrial production over 2 quarters has, so over the last 2 months, has weakened quite a lot, right? So to give you an example of how much it's weakened, we and market was expecting 1.6 or 1.7%. For this number, 1.7%, and what came out was minus 0.8%. And if you compare it to, so if you take out seasonality and base, in fact, industrial production currently is below pre-pandemic level. So these were levels that we last saw in Jan or Feb this year. So we've been seeing a lot of weakness within industrial production, in particular within the consumer goods side, both consumer non-durables as well as consumer durables, and it's also broad-based. And I guess so if you look at the industrial production side and you look at what's happening on exports, which has started weakening quite a lot month on month, our monthly trade deficits are pretty elevated because of that, because our imports are pretty sticky, whereas exports have started falling quite a lot. And then that makes you think, well, what's really causing this, right?
Yes.
So the first case of nervousness is the fact that the global climate is already started slowing down. Now, we believe that the US is already in a recession in this current quarter. And the whole of next year, it's going to be pretty much in recession, as is the case that's going to be for, say, Europe, as it's the case is going to be for a number of developed markets. So you're going to typically see a hit to exports. I guess what is worrying is that before we've actually hit the recessionary iceberg, exports have already started slowing down.
Global central banks are doing what they can after what they did during COVID times, which is flood the markets with money, and that's why we see unprecedented inflation all across the world, especially in the most developed countries. What do you expect the Indian Central Bank to do in the situation with persistent inflation and slower growth?
So the MPC has already, the Monetary Policy Committee that sort of decides what the interest rates are going to be every 2 months, have already started showing cracks within themselves. So the minutes that came out last week of the September meeting shows that the erstwhile hawk Jayant Verma, Professor Jayant Verma, has become essentially one of the outlier doves now. So sort of saying that, look, 6% is enough, 1% real policy rate is fine for us. We need to wait and watch. We need to see what will happen to growth and then decide. Professor Ashima Goel has also been of the same view. So out of the 6 members of the MPC, 2 seem to be of the view that, look, we've hiked enough, and 6% is broadly the level where it should be. Now, the RBI has been tight-lipped about giving forward guidance, but Governor Das has mentioned that, look, despite all the hikes we've done so far, monetary policy conditions still remain accommodative. Deputy Governor Patra has said that, look, monetary policy needs to be on red alert. So I think we are reaching the end of the tightening cycle. I don't think India and even other emerging markets, especially in Asia, are going to tighten to the extent that other developed markets are doing, simply because our inflation levels and impulses are lower and much different than what the developed markets are doing. But we don't think that they're going to stop just yet. So we are expecting 6.5% as the terminal repo rate. So we expect a 35 basis point hike in December, 25 basis point in Feb. Now, it could be that, December could be the final rate hike, but that depends a lot on where October inflation is going to be, which is the last inflation print the MPC will get to see before they decide on the December interest rates. But just one point that I think is worth mentioning is that India's target inflation is 4%, right? We are now at 7.4%. Underlying inflation is around a little over 6%, right? So we are not even close to the upper band of RBI's tolerance level, right? So it will take some time for inflation, take some time and take some luck for inflation to kind of settle down at 6% and then go below. And really the concern is that at one point there is a growth sacrifice that is involved in trying to bring inflation down, right? And the key question is whether in a global recession year, policymakers would be ready to make that kind of growth sacrifice in order to bring inflation actually down to 4%.
Right.
So we might end up being in a situation where policy rates sort of remain somewhat elevated at 6.5%,
right,
but then medium-term inflation also remains a little high.
In a big blow to the Fiscal Balancing Act, the government is once again likely to miss the disinvestment target set for this year. Against the target of 650 billion rupees, disinvestment receipts have been just 245 billion in the first half of the fiscal. With the big ticket sale of BPCL and IDBI Bank unlikely this year, most analysts are expecting the government to miss the target this year as well. In fact, according to reports that are coming in, after failing to meet the disinvestment target consistently, the government is likely to set a very conservative target going forward for FY24. This is what the senior finance ministry officials have revealed. In the last 10 years, the government met its disinvestment target only twice, in FY18 and FY19. The past 4 years have seen the actual realizations fall much short of the target. Microsoft has laid off people across multiple divisions worldwide. Though the tech giant has not disclosed the numbers, reports say that as many as 1,000 employees have been shown the exit door. The report cited information from social media where a number of employees laid off by Microsoft have expressed their angst. Microsoft joins the likes of Meta, the parent company of Facebook, Twitter and Snap, which have cut jobs in the recent months. For more on this, I'm joined by Business Today TV's Akanksha Chaturvedi. Akanksha, welcome to the show and tell us a little more about this entire attrition and the layoffs that are happening at Microsoft as well, and what are the reasons?
Microsoft has laid off 1,000 employees. It's worth noting that the company said that these employees had been handed pink slips because it was a part of structural changes at the company. Many experts believe that this is because of the rising inflation and the economic downturn in the West. The company is trying to cut costs. Moreover, this is the third round of downsizing at Microsoft in this year. It's worth noting that Microsoft is not the only tech giant that's going through a bad time. Many reports claim that even Meta might soon have a downsizing round and let go of 12,000 people. Well, the economic downturn in the West is not just causing trouble for the US. This downturn has also had a trickle effect in the Indian economy. The Indian IT sector, the Indian tech sector and Indian startups have been impacted by this. As we've been reporting for over a month now, Indian IT companies have been delaying the onboarding of freshers and as well as new employees. Moreover, this is probably because of the global exposure that they have. Most of their business comes from outside. Also, Indian startups like Ola, like Byju's, Vedantu, Cast24, all these people have, fired thousands of employees. And it's also worth noting that these big tech companies like Meta, Microsoft and others had heavily invested in Indian startups. As we all know, Meta had invested in Ola. And since Meta itself is feeling the pinch of the inflation, it's also reflecting in its investments here in India.
Japanese car maker Nissan showcased 3 of its most popular international SUV models, with the new X-Trail SUV set to be launched first. The latest versions of the Juke and Qashqai have also been shown in New Delhi, with the latter being tested on Indian business roads. Business Today TV's associate editor Chetan Bhutani caught up with Rakesh Srivastava, managing director at Nissan India, and asked him about the products and his outlook for the festive season going forward. Listen in.
Today we have showcased 3 technologies, the e-Power, the e-Force and the hybrid, to our Indian customers through the media partners of ours, and 3 different body styles in SUVs itself. We believe the Indian customer, is very discerning, very demanding and is now very well globally connected. In view of this, we believe the opportunity is good, towards addressing specific needs, specific wants of the Indian customer. Nissan has pioneered SUVs in the global market, and when we say we have pioneered it, we have led the SUV market by way of multiple product options addressing multiple customer needs. And the beauty is that today we have an opportunity to demonstrate the same, our global product portfolio, to the Indian customers.
Sure, sir. You mentioned that the X-Trail would come to India first and eventually the later products would come. Any timeline that you would like to focus on? I'm not asking the exact timeline, but just this would definitely pump up the consumer sentiment. So any hint that you would like to give us?
As we said, and as was announced by the President, currently we are testing products, because Indian driving conditions, looking at the suitability, the feasibility of it, and we are working on it. And as committed by the President, X-Trail will be the first one to be brought into the Indian market.
Right, sir. Tell us about how much is the global headquarters investing into the Indian markets, and with these 3 products, what are the India plans for expansion, for dealership expansion, marketing plans, and really getting the customers to the whole now, sir?
When we talk about global investments or the global headquarter investing in India, this investment started long back, It's almost now 17 years, and then we have invested in India by way of a manufacturing facility, research and development facility, digital facility, a sales company and a finance company. We have a very, very unique proposition. Investments running beyond 6,000 crore plus, creating employments. And over these years, we have been able to pick up the right insights, what the Indian customer wants, and not only making in India, only for India, we also export cars. And I think that's the strength of Nissan in India. And towards this we can say is that, yes, we make our stakeholders very proud.
Right, sir.
The headwinds of COVID, chip shortage and economic uncertainty have given way to the tall winds of an incredibly pent-up demand for the Indian auto industry. Sales this calendar year have been the best yet, surpassing the previous record set in 2018. What's more, the SUVs have for the first time overtaken hatchbacks as the most preferred body type amongst the consumers.
It's a resurgence powered by new launches, by fresh optimism amongst the consumers, by a pent-up demand generated by 2 years of lockdowns. New cars are flying off the shelves as consumers return to the market with a vengeance. The Navratri this year has already been the best ever for the auto industry, and analysts are expecting the same from the full festive season. What's more, this year from January to September has seen the auto industry set new records. Sales in the first 9 months of this calendar year have surpassed the previous record set in the pre-COVID era of 2018. After the dip in 2020, a slew of factors have ensured a new high for passenger vehicles this year. And with 3 more months to go, 2022 is on track to be the best year ever for the auto industry. What is interesting is the clear shift towards SUVs in the Indian market, with manufacturers like Tata, Citroën and Renault launching micro SUVs like the Punch, C3 and Kiger. Buyers have more options at small car prices and are choosing to buy the more aggressive-looking SUVs. It also helps that these vehicles with higher ground clearances are more suited to travel in the hinterland. This craze for SUVs have made them more popular than the traditionally lower-priced hatchbacks. This year, SUVs have overtaken hatchbacks for the first time. Interesting, this SUV mania has seen the Maruti Alto, the #1 selling car for 15 straight years, fall to #6 position. There's been a sea change in the market share of car manufacturers as well. Maruti's decision to exit the diesel market and the dearth of SUVs in its portfolio has seen its market share fall from 50% it held a few years ago. This year, in the first 9 months, Maruti's market share fell to 42%, down 2% over the last year. Hyundai has also a 2.6% market share as well. The big gainers, Tata and Mahindra, riding high on their SUV fleet. The figures for next year, 2023, are expected to be more interesting. Maruti's re-entry into the high-volume mid-SUV market with the Vitara Brezza and the increasing popularity of EVs will blaze completely new trend lines. Bureau Report, Business Today.
Well, that's it from me, Chaiti Narula, on the Business Today show. Keep watching India Today. For more news and updates, do not forget to log on to indiatoday.in or go ahead and download our app. Thanks for tuning in. Thanks for your time. Wishing you a very good night.